And just like that, the U.S. government is back open. The longest government shutdown in the history is resolved overnight. S&P's responding. Triple D was watching for a move higher on the announcement because algos don't price anything in ahead of a time. That did happen. However, we have leaked back a little bit of those gains overnight. So, what's next? We've been watching this US government shutdown for quite some time. What's next for Mr. Market and Wall Street? Well, came in this morning and looked at my CME FedWatch tool. The odds for a December rate cut are now under 54%. This is a little bit of a development here for us this morning, folks. We're also going to get into some earnings, of course, from overnight. Cisco, Disney, JD, maybe even better. Michael Burry deregistering Scion Capital. Was it some of those put positions that he had on Palantir and Nvidia? We're going to get into that a little bit. SEE, Sealed Air, go private talks. Few rating changes for a little bit later. Our guest at 8:35 a.m. It's our boy Blu Putnam will be joining us to talk about the inflation data that we don't have, that we didn't get for October. Maybe we'll never get. We'll see what Blu thinks about this again at 8:35 a.m. Folks, let's get it going here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let's get up the TradeStation charts here. Thank you to TradeStation, the official chart sponsor of Pre-Market Prep. I have my S&P 500 futures contract up here. You have to type in the month and the date and the year ending to get to this contract that I'm looking at. ESZ25 is the code that I'm using. S&P 500 futures trading down about 12 points, about 0.2%, 68.63 and 3/4 last trade there in S&P 500 futures. Let's look at the NASDAQ futures here. Got to do the same typology there, NQZ25 to get this futures contract for NASDAQ. Also trading down about 0.2%. Look at the small cap stocks here and the Russell 2000, the IWM leading lower here, down about 0.5%. Let's take a look at Bitcoin real quickly while we're at it before we bring Triple D into the mix. Bitcoin this morning rebounding, IBIT showing the fund up about 1.5%. That's where Bitcoin is also around 1.5% higher, around the 103,000 level. Hope everyone's having a good morning so far. Let's bring in Triple D and see how he is doing.
Oh, he's doing okay.
He's doing okay. Okay.
Fighting a really bad cold, so bear with me. The nasally voice, the headaches going. I got the whole shebang, but we're going to fight through this for you guys. So we're here for you. We're going to get you some trade ideas. We're going to get you some information because we got to keep you informed. The show must go on despite having colds. This is young kids, what they do to you. They bring home everything. Everything comes home with the 8 and 11-year-olds. Just my boy got a little while ago. I think my daughter had a little touch of it, but they seem to bounce back faster. Is it old age? Is that what it is?
Yeah,
we just
I
don't
think
bounce
so.
like we used to.
Yeah, I mean, I used to jump on my knees when I was a youngster. I'd just be standing, I'd just jump on my knees, and I'd just be fine. I feel like that's a good description for how you are in old age. You can't just jump around anymore.
No.
I jumped up on my counter the other day in my kitchen to look out the window, and I was like, how am I going to get down from here? I don't know how to get down from here now that I'm up here.
Back in the day, you just jumped down. But
I know.
We're popping the vitamin D. We're popping the vitamin C. We're popping the zinc, the echinacea. We're trying to pop everything we can to get through this. So if you got other things you want me to pop, I'll take them. It's like stock trades. You give me an idea, I'll go for it. You give me a vitamin, I'll take it.
You are pretty easy to convince into a trade, Dennis, I will just say.
Okay, so the U.S. government shutdown is officially over.
Woo!
So, which is the good news. The bad news is it was all priced in because we popped last night on the
Yep.
official announcement after hours, and we just kind of leaked it all right back.
Yeah.
So naturally, you'd think like airlines, but the airlines were up 4 or 5% ahead of yesterday because everybody kind of knew Delta had a great day.
Sure.
American Airlines, UAL, they were all up ahead of this. So, do they continue to go up? I don't know. They never really went down much on the shutdown in the first place. So, are they going to
True.
go up a lot? I think we had 3, 4, 5% moves in a lot of these names yesterday. Some of it definitely baked in. So the talk now moves to cut or not to cut. That is the question. Bring that tool back up, Mr.
Yeah.
Brentster. Let's discuss this because at one point in time, this was what, 95%?
Yeah, absolutely. And not that long ago. We're talking like less than 2 months ago. This was at 95%. Drifted down to about 90%, drifted down to about 70%. Now we are looking at the odds of a December rate cut happening almost less likely than not happening. We are at 53.6% that a December rate cut will happen. We are at 46.4% that a December rate cut will not happen. Now, I did not click when I was doing my pre-market research before we jumped on air. I did not click to the January 28th meeting. Let's just click over there live to see how this has changed in kind. So we are currently at by the end of January, there is still there's 30% chance, almost a 30% chance that there will be no additional rate cuts. Not at December, not at January. What do you think
It's
about that,
going to be
Triple G?
curious. So we have Blu Putnam coming on at 8:35, and we'll
Yeah,
save some of this interest rate discussion for
sure,
him because he's the expert. Me and Brentster just look and say, hey, it's trending down. That's not good. If you want needing rate cuts like your small caps and your biotechs and other stuff. But I mean, maybe Blue's going to come out and say, because he said before, it's not their style to go one and done. They've done two now. What is his thoughts? So we're gonna wait for Blu Putnam to get
sure,
thoughts on the rate cuts.
sure.
There. I want to go to Michael Burry because
Let's
this is
go.
interesting here.
Okay.
So lots of news coming. His Twitter is Cassandra Unchained. Michael J. Burry. We knew he bought Palantir puts. We knew he bought Nvidia puts. We have details on that now. So he obviously is betting, on a market crash with these positions here. He bought the $50 puts in Palantir for January of 2027. So looking out 14 months. Yeah, no, not 150, the 50s. So he's banking on a complete market crash. He spent $9.2 million on these puts, bought 50,000 contracts for $1.84. He tweeted that last night. He also bought 10,000 110 puts on Nvidia for December of 2027. So again, betting on a market crash. He's been trying to bet on a market crash for a very long time. He obviously got it right during the financial crisis, made a lot of money, and that kind of was his claim to fame. He has basically been bearish for the most part for a long time here now and been wrong. So he's actually gone to another level here now, and he has deregistered his hedge fund. So he's saying that he doesn't understand these markets anymore. Obviously, they're very disconnected from fundamentals. We've talked about this too. And, he's basically making a last hurrah bet on a potential market crash somewhere in the next year where he's going to cash out on Palantir and Nvidia. I think it's like wishful thinking unless, there's something really crazy. That is a significant fall. Like, is Palantir really going to fall 70% the next year? Is Nvidia really going to get cut in half in the next year? It's possible. We've seen stocks fall 90% in the past, but I mean, he's reaching here with these bets. I kind of feel like it's like his last lottery ticket to try to rebuild his credibility. So if the market crashes, everybody will be all over him and say, Michael Burry told us so. So it's kind of at that point here now. These feel like lottery bets to try to save face.
Now that we have this info to Triple D, what do you think about Michael Burry's 13F filing that we just got, which we are in 13F season. This is the last week that hedge funds are required to disclose their holdings from the end of the last quarter. The 14th or Friday is going to be the last day. So we were kind of like, oh, Michael Burry's 13F is out. This is a little early. Do you think
Yeah.
that there was anything involved in him getting that out
I'm
a little
trying to
early?
remember the other position. So I remember the
Yeah.
Nvidia puts and the Palantir puts. Didn't he do a couple longs too? You
He
remember what they were?
did. They were like staples or something, right?
I
Didn't he
can't
do,
remember.
like, was it
So
Coke?
Chad, help us out here because Michael Burry has become insignificant to me. So I literally just had it in my brain for a day, and I've already pushed it out.
Well, there you go. I mean, that's a good little, like, unfortunately for the Michael Burry fans, I think that's a good little summary of
It
how
is.
we should
And
look
and
at
and
Michael Burry.
Mark Shakin has said this on this show before. He said it's one thing to be right or wrong, but worse than that is to become irrelevant. I do believe Michael
Mhm.
Burry has become, because he's been wrong for so long, he's kind of become irrelevant. I know we
Yeah.
gave him, like, oh, the Palantir crash from last week was all Michael Burry, and that was nonsense. It was just
That was
overbought.
nonsense.
The stock was way overbought because that came out and Palantir was actually up for hours after that. It
Mhm.
was just a matter of, stocks being overbought. They want the media gravitates to something
Of
and they
course.
want to write sexy headlines. So they're like, oh yeah, this is Michael Burry that caused this. I don't believe that for a minute. That was
I
Michael
don't
Burry
believe
that
that for a
caused
minute.
Palantir to sell off last week.
Yeah.
And he's reaching. I mean, it's one thing to buy the 150 puts. When you're going out to 50, you're basically saying, hey, this company's potentially going out of business. I mean, I would buy Palantir at 50. So even if it gets down there, is it going below that yet too? Nvidia too? Like, I mean, getting
Let's
a
see.
reset, I don't understand these bets at all. I think it's just like trying to be the last hurrah that he could potentially say, I told you so if the market crashes. Market
Yeah.
can crash, but I think if we're sitting here looking at Michael Burry and saying he knows something, you're not looking at the track record. He hasn't known much since the financial crisis.
Let's see if the chat. I tried to look real quick to see the other ones that because he did the 2 put positions and then he did 2 call positions. It wasn't EL because that was just like his big stock position. The thing, Dennis, is I tried to go to the SEC's Edgar site to go look at the actual filing, and I guess it's deregistered also. Like, that was the news that was deregistered, but like I couldn't find the filings on the SEC website. So I can't go look back as far as I can tell.
So I don't know either.
Yeah,
But at this point in time, if you guys don't know, it's not worth knowing. So is it
there you
Lulu?
go.
Is that what he bought? Was Lulu?
I don't think so.
MOH? They're guessing. I don't remember. I seriously don't remember. We could probably go do 5 minutes of research and find this for you. But if nobody knows it, that's how irrelevant it
There
is.
you go. Let's
So
just
that's
lean
the
on
bottom
that.
line.
Exactly.
There's
And this
better
was
things to
like
talk
last
about than
week.
Michael Burry. He's
Yep.
obviously resetting, he's shutting down. It looks like his hedge fund here. And you know what? It's got to be frustrating to be a fundamental trader in this market because we know fundies don't matter. And I mean, we talk about this all the time. Fundies don't
Yeah.
matter until the story goes ice cold. Then they start to matter. And we've seen that start to matter in some names here. Palantir, he's picking on the strongest one because we've seen collapses in Oklo. We've seen collapses in like Circle. We've seen collapses in a lot of names out here. And Palantir is really not collapsed. It's holding up pretty well for like the Momo collapse of the last month. So I'm actually impressed with the relative strength in Palantir. It looks to me like the stock wants to go higher. So I don't think Michael Burry wants to hear that. But I think at this point in time,
Halliburton.
I like to be shorting weak stocks as opposed to strong stocks. Palantir has held up very well.
Halliburton, Edrimac is saying Halliburton. Halliburton was definitely one of them. I don't remember what the other one is. I mean, when you make these like bets against literally the 2 highest profile stocks in the market, you're trying to make a claim here. You're trying to, like, grasp at something. So, I mean, I feel like there would have been a lot of other better options that he could have, bet for the downside, but he didn't. He wanted to like stake his claim in here and say Palantir and Nvidia, I'm fighting against them.
He's
Guess what?
picking
It didn't
on,
work.
yeah, because if he does a short on something smaller, it's not going to get the
Nobody
headlines.
notices. Exactly.
When it's Palantir, he
So,
picked on the 2 main
exactly.
retail Momo names, Nvidia
Exactly.
and Palantir, the 2 big ones. That's intentional. It's not that he thinks they're going to go down. It's that he wants those to go down to be vindicated. It's not
Yes.
about money for this guy at this
Yep.
point in time. The guy's rich. He
And
called
this,
it, he called the financial crisis very well. It's about vindication. And at this point in time, the only way for him to get vindication is if we actually do get a market collapse because he's been
absolutely.
wrong for years now on
And
calling for a market collapse.
I think it's important to like like monitor and notice these kind of things, because this is the psychology that gets into the market. Michael Burry is not the only person who tries to like make these, dramatic calls to get attention in this way. This is
Well, some people hate these stocks. I mean, absolutely hate them because they keep watching them go up and they're like, it makes no fundamental sense. Fundamental traders hate this market. Fundamental traders have struggled in this market for a long time. We've talked about, besides the last month and a half where we've seen value stocks start to pick it up. I mean, it's a real struggle. If you've been just sitting with your CFA hat on and saying this company's cheap
Sure.
relative to cash flows and just crunching numbers, you've like underperformed this market massively, epically, massively. I mean, even Warren Buffett has underperformed this market in the last little while. Now, obviously, Warren
No,
Buffett gets a pass on a lot, but he
I
has.
think so.
In the last 6 months to a year, he's underperformed. But I mean, I still would never bet against Warren Buffett. So I think fundamentals do win in the end a lot of times, but sometimes you got to wait a real long time. I don't know like about Nvidia. I think the fundamentals support it. We talked about this, why I was long the stock, 2 years ago, because the growth was going to be there. So I don't think Nvidia is like crazy expensive if we really think that AI is going to change the world. They're in the pole position of pole positions. So it's hard to wrap your head around something that's trading, at 45 times earnings, or if we look at sales, but when you look at what Nvidia has done, the growth that they've had, it's actually been a value stock for the last couple of years. Now, at this point in time, it might be stretched, and I do think AMD is going to eat the lunch. I'm on the record saying I think AMD is my play now going forward, but I'm still long some Nvidia too. I'm way bigger in AMD, but because I think there's catch-up trade here. But Nvidia, is still in a great position. There's no doubt about it.
I think a good point here from No Way, how Nvidia doesn't make fundamental sense if you believe AI and the numbers they put in. I think I can respond to that because these companies grow into these valuation and these growth figures.
They can.
They can. That's a good way
They
to
don't
put it
always,
too.
but they do
Yeah.
sometimes. In this case, Nvidia absolutely grew in its valuation. I mean, we had a guest, I don't remember who was on here 2 years ago, and saying Nvidia makes no sense when the stock was $50. But I mean, when you looked forward and you looked at where it was going, that's why it did make sense. It's just projections. So that's why I say, trailing PE is a metric that you'll never, if you're using trailing PE, you will never catch these growth stories. If you're like a PE guy or girl, you'll never catch the growth stories if you're looking at trailing PE. You got to look at forward and look at where it's heading. Like, where are we going? I mean, right now at AMD, for instance, you could argue that, wow, this stock, and let's just bring up the fundies, is trading current PE. It seems crazy, but it's currently trading 135 times earnings. So you can go to grave saying, well, this makes absolutely no sense. It's never going to grow into this valuation. But if you listen to the conference call, and they're projecting $20 in earnings. Well, it doesn't take a rocket scientist to figure out that, hey, if they actually hit those metrics, this thing is not trading at 135 times earnings. This thing's trading a hell of a lot cheaper. Now, again, they have to hit those metrics, and they may not. But I mean, if Lisa Su, who does, have a tendency to, not like, she's not like Elon Musk, where she's just talking, she actually sandbags it, if anything.
I think
so. Where she's probably conservative with her estimate. So she has a history of being conservative. So I mean, if AMD can get some market share from Nvidia, if the AI craze continues and the pie grows bigger, it's not absurd to think that her estimates might be right. And then you're looking at this and saying, hey, this stock maybe not that expensive. On a trailing metric, it looks insane, but on a forward basis, it doesn't look nearly as insane.
Triple D, let's go to earnings. That was an excellent discussion there coming from the Michael Burry. So, that was a nice little discussion there. Let's go to Cisco. Start with kind of the first one, sort of chronologically that happened. I'm going to pull up the chart here. I got the numbers in front of me. Company reporting $1 per share on the bottom line. That's a 2-cent beat. That was a 2-cent beat. Sales also a modest beat, 14.88 billion. Analysts were around 14.77 billion. Guidance looks solid for next quarter. They're expecting Q2 adjusted earnings 101 to 103. Analysts down around 99. Sales also looking strong, and then they raised their 2026 guidance. They raised pretty modestly, but still a raise. They raised from a prior range of 4 to 406 to a new range of 408 to 414. Analysts are around 404. They also did raise their sales guidance. Cisco shares here this morning trading up about $5 or so,
Holding the gains nicely. And if
holding the
you were
gains
sitting
nicely. Yep.
here and you went long this in the year 2000, you were almost made whole. The 2000 high on Cisco was $82. So if you held for the
Oof.
last 25 years, you've almost got your money back if you bought that peak on Cisco. So, I mean, sometimes trading, crazy multiples here do not work when you're in a huge bubble. I mean,
Mhm.
Cisco has grown the company and grown the company and grown a lot. But it's funny, even though how much it has grown, the stock has, taken this many years to get back to where it was because people were
Yeah.
just paying too much for those earnings. So, but back, like I'm going to keep comparing, to, the tech bubble back in 2000. This is not the tech bubble, folks. There is a few bubblicious stocks. Somebody just said that in the chat, but there is a lot of stocks that are not trading with ridiculous multiples. In the tech bubble of 2000, everything traded with ridiculous multiples. The CFA course in itself changed, like their valuation metrics, back in 2000 because they put a whole chapter in on how to value companies that don't make money.
Really?
2 years later, because there was just so many companies that just had ridiculous valuations. It was the internet bubble, and if you had, a 7-Eleven on the corner and had a website, you were worth $1 billion. That's how stupid it got. It got just so stupid. So this is not that. We are not. The comparisons that people don't remember, where the way it was. So Walmart trading 50 times earnings, which it actually is kind of starting to come up to there now. But there is a lot of people out there that like to do that comparison. So I just want to say, from my experience, there is some pockets of this. There are some stocks that definitely, probably like the Oclos of the world, traded too high of a valuation. But this is not the entire market that's so bubblicious and it's all going to crash. There are stocks that are trading with ridiculously low P's. We've talked about them. General Motors made a new all-time high yesterday. We've talked about General Motors. I said it back when it was 50. If I was this company, I would take it private. It was trading 5 times earnings. Now they didn't do that, but the stock is starting as the value market starts to become cool again. This stock is quietly went from $50 to $72 here in the last 3 months. So value stocks have come around. Cisco, bringing it all the way back, has turned from this growthy stock that was trading 100 times earnings back in the year 2000 to more of a value name. It's value tech, and again, it's come up a little bit lately, but it's still only trading 18 times forward earnings. So I mean, this is the value tech camp. So, it's not surprising that some of these value tech stocks are going up here too on days that we continue to see weakness in the growthy stuff, the stuff that is like the core weaves, that we're probably a little bit too bubblicious.
Yeah. What the heck? I got to turn on my 24-hour chart. Oh my gosh. What the heck? I got to do this every time. Okay. So just technically, I mean, if I had to give a couple levels here, give a little bit of a range, watch that $75 level here, which was a little bit of resistance back at the beginning of November. Also that 72.50 level right around the beginning of August. On the upside, you were looking at, I think, Dennis, yesterday, that $82 level that was, I think, the all-time high back all the way in 2000.
I've got to think there's some major resistance up there. I mean, 25 years later, we get back to the all-time highs. I got to think the first time we're up here, there's going to be some resistance. So I would not be chasing Cisco into this 7 or last night it was a 9% pop.
Want to do House of Mouse next?
Yeah, for sure. Let's
do
it.
House of Mouse next. All right, pulling up the chart here so y'all can follow along. Disney reporting adjusted earnings $1.11. Analysts were looking for 104, so a decent beat there. Sales also beating. Sales missing 22.5 billion. Analysts were up about 22.8 billion. They are expecting double-digit adjusted earnings per share growth going into 2027 from 2026. They also added to their buyback plan. Their buyback plan is now about $7 billion. They also declared a $1.50 per share dividend. It's going to be payable in 2 installments of 75 cents per share. Let me make sure my pre-market charting is on here for Disney. What do you think of the Disney report? What do you think of the price action response, Dennis?
I think the report was fine. I think it was fine. It wasn't great, but it was just fine. I think some people like myself have been worried about Disney for a while, but they continue to hum along. So they did beat. They missed on revenues. It was fine. Stocks trade down. There's good support down here from 108 to 110.
Yeah.
Disney's not my stock. And, you know, if you've been invested in Disney for the last decade, you have underperformed massively. Is there this time and place where Disney's eventually going to come back? Yeah, I think so. But I mean, I do think the real economy here is slowing down a bit. I mean, the AI economy is not, but I think there's a lot of other places where a slowdown is imminent. And I don't know if the people are going to have the money in 2026 to be going to Disney World as much. There are always people going to go. But if sales fall 5%, I mean, that's a stock crash for the Disney. Like, they can't do that. So I just think there's going to be less people in I think 2026 is going to be tougher for a lot of businesses. And I think Disney's maybe one of them. So I'm probably just staying away. I think there's better places to be.
All right, Triple D, we do
have Blu Putnam in the background.
We do have
want to
Blu
bring
Putnam
Blue.
in the
Blue, if you're ready, and he can probably hear us, put your thumbs up, because I hate letting my guests are like Blue, and he's awesome. He's ready. So let's run that guest intro. Cool. Let's get Blu Putnam and talk some interest rates.
Woo! Blu Putnam, how are you doing this morning? How's your week going?
My week's going pretty well, thank you.
Yeah, Blue just gave us a little heads up that somebody might knock on his door. So if he gets up midway through the interview, it's not because you upset him, chat. It's just because he has to deal with somebody knocking on his door. All right, Blue. So the U.S. government is officially reopened. We heard this comment yesterday from the White House press secretary that we may never see the October CPI data. How is that possible?
How is it possible? They just don't do it.
You think they actually have not been doing the inflation data? I figure it's being compiled back there somewhere, but whether they want to release it is a different story.
Well, a lot of the process is automated or almost automated, where it's survey, the people, they get prices, through regular feeds. But some of it is survey data, and they do have to do some work putting it together. I suspect we'll get it with a lag.
Okay.
And it won't really matter. I mean, all right, it would be not great news for the administration if it was up a tenth, and good news if it was down a tenth, but it's not going to be, it's not really one piece of data that's not going to move much is no big deal. So we'll survive. But we'll probably get it with a lag, and those people who need that data will have to learn how to interpolate between two data points.
Oh no! So we have.
What is it with it being lost, though, Blue? Is this like just I mean, they're saying now, in Trump saying the Dems have screwed this up. Obviously, they always blame everybody else. But can data just get lost? Can it be compiled and it's lost, or is that just nonsense?
Well, the data that's compiled, if they never get it all together, it's probably not lost, but you and I are never going to see it.
Yeah.
I really think the missing data is no big deal. I mean, a couple of months from now, we'll have new data. We'll be on our way. The Fed doesn't need this piece of data to make a decision. We've already gotten plenty of alternative data that says things are still weakening. We know big companies are laying off thousands of people. They're going to argue about it, and then they're going to cut rates 25 basis points.
Sure. So lost data, maybe we don't care about. Do we care about delayed data for December? And not that I think that this is like important necessarily, but it's just something that I've heard traders talking about over the last few days. The December data is going to be delayed. Maybe we won't get the December or the November CPI data for a little bit later. Does that matter to you at all?
No, I'm sorry.
No, you're
I'm
fine.
I'm a data guy, but I don't worry about one data point, particularly when I have all kind of supporting data that tells me pretty much what's going on. I think the real critical thing is we get labor market data the first Friday in January.
Okay.
We need that because there is a Fed meeting at the end of January, and that one
Sure.
is much less clear.
Yeah.
It'd be nice to get December inflation data, which would come out around the middle of January. I think we'll be back on track before there's a really a Fed meeting that needs the info. As a market economist, I follow so many other indicators. They're all correlated. Missing this one is not the end of the world. I'm actually surprised people are so upset, but I think it's all political. It's not, the analyst stuff. We can get around it.
Blu, let's go to the Fed Watch tool here, and we have seen the December probabilities of a cut slipping and slipping and slipping to the point where it's now only a 55% chance of a cut happening here. One, what are your thoughts on the odds slipping? And two, do you think they're going to cut?
I think they're going to cut. I understand the 55-45 odds because we've had a governor or Fed president or two say, well, maybe we should stay on hold. We've had another governor saying, well, wait a minute, I like cuts, and maybe even more than one. This, as Jay Powell told us at his last press conference, this meeting is in play. It's a debate. Yeah. But without any data, official data, with the alternative data that points to a little further weakness, I think they're going to go ahead and cut. So I'm in the 80-20 camp that they're going to cut. I'm not 100%, but I'm way better than 55.
Your video froze, but we can still hear you fine. So we'll probably just keep going with it. What about out to January? Because we're showing the odds on that now. And there is, the odds are that they're higher, 26% chance that we're not going to cut in December or January. But what are your thoughts, like the path going forward here? Are we just looking at more cuts in 2026? What are your thoughts, longer term interest rates?
I think we're looking at more cuts. My guess is we go all the way down to a Fed funds target range of 3 to 3.25. But I do think if you were going to take a pause, the January meeting would be a time to pause and reflect.
Sure.
So that would be possible. The big thing for the Fed in 2026 is not data. It is who President Trump appoints as the new Fed chair.
Of course.
That chair doesn't take the position until Jay Powell's term ends in May. But whoever he appoints is going to be a shadow Fed chair from day one. And that will redefine this whole debate.
Sure. Makes really good point, Blu. So let's go to the jobs that you hinted at there a minute ago. Concerns for the job market, excitement for the jobs market. How is the Fed going to interpret this information and get it into our rate path moving forward?
A great question with no easy answer. Most of the job cuts are coming from really large companies. Many of them are tech companies. There is no question that AI is already having an impact on the job market. By the way, it's having an impact in two ways. First of all, it's an awesome excuse to cut your labor force if you are already planning to lay off some people. Great excuse.
Yeah.
But secondly, it's having a real effect, particularly at lower to medium jobs. It's really tough out there for college students graduating, new MBAs, things like that. This is going to be a tough year. So we are seeing job cuts. These are cuts that aren't coming back, and they're not easy to retrain somebody else to do. It's just not going to work out that way. So the economy it doesn't necessarily go into recession, but we're definitely talking a period of slower personal consumption. And then, you didn't mention this, but we have the after effects of the government shutdown.
Sure.
2 million people didn't get paid for a month. 600,000 or 700,000 were furloughed and need to go back. And these are all kind of tricky things that will have a pretty serious overhang for the economy into the all-important December sales season for retail companies. So it might not be a super strong retailing season. Another reason for that is toys. 80% of our toys, I think it's actually a little more, come from China. Did they get here in time? Are they all inventoried up? Will they have sales? Will consumers spend the money? We're just in a period of slowing down, not recession, but it's going to be a period while we adjust to where we're going.
Do you think the consumer rebounds into 2026, or do you think it's still like, is that like slow, and obviously jobs is a big driver of this because, we had, just recently on CNBC, and I talked about this yesterday, but I want to get your thoughts on this too. Barry Sternlicht from Starwood Properties was talking about AI eating jobs, and he gave one example saying, hey, look, I got 15 people I can cut with a chatbot that cost me $36 a month. So, I mean, there is definitely going to be some job losses from AI, whether the question is, are there other technical jobs that pick those jobs up? So 2 questions. 1, what does the AI landscape look like in 2026? Does it cost people jobs? And 2, how does that impact spending?
Yeah, there's really 2 questions there. The AI landscape will cost some jobs. By the way, if somebody said they can replace a lot of employees with a $36 a month chatbox, they're going to make an absolute ton of errors. Their clients are going to get real mad, and they're going to lose business. They cannot do that yet.
Yeah,
but they can lay off some of the people, because what you really need with AI is more like supervisors or more senior experience. The AI stuff can do the easy part to get you started. I'll tell you my own experience. I don't like to apply my own experience to my forecast because I like to think I'm slightly unique and always wrong. But anyway, but I do a lot of coding because I'm a data guy.
Okay.
And I will tell you that the AI systems for coding are nothing short of amazing. I no longer need an assistant for coding. I get a faster answer from AI, and it's good enough most of the time, but it's never always 100% right. I do have to fix things. You can't just fire everybody, but you can make some changes. And that's what will be happening in 2026 in the next couple of years. Is as companies adopt AI, they'll figure out who they need to keep and how they can make changes. There will also be more jobs. These data centers require thousands of construction workers. They're just not the people getting laid off. So the economy will do okay, but it's going to have a lot of friction in it, and that tends to mean a slower economy. So I don't think the jobs on net over the whole economy come back, but I don't see any kind of serious recession. We might dip into one down quarter or something, but we're okay.
Oh, Blu, you haven't said the R word in quite a while on pre-market prep. I'm glad you brought it up.
Well, I used the R word at the end of last year and early this year with you guys, and I gave it like a 70% probability of a minor recession, and it didn't happen. So, I'm being more cautious this year. But I'll tell you that you get deep recessions when you have a financial crisis, or when you have something, like came out of nowhere, like the pandemic. We don't have a financial crisis. We're fine on that score. So if we have a recession, it'll be pretty minor. We'll come back out of it. It'll be more like 2000, 2001 and 2. Not a serious one, but still they're never good.
So just back to the jobs landscape for a sec. I saw a comment from a Fed official yesterday, and you've been kind of hinting this already, Blu, but I want to see if you can go even a little bit further. I heard a Fed official yesterday say the jobs market isn't slowing, jobs growth isn't slowing, it's shifting. And you just gave a really good example of how that's shifting, talking about, the need for data centers and construction. Where else do you think the job market shifts to besides, I guess, sort of the initial roll up of some of these data centers for AI and quantum, et cetera?
Well, the long-term growth in low to middle income jobs is in the healthcare industry. We're an aging population. We're definitely going to need more workers there, AI or no AI. A lot of those workers have to be, people that take care of people, other people. It's personal attention. AI can't do that. But that's the long run growth. That's not the short run. In the short run, there's no obvious pickup We do have challenges in some agricultural sectors, but that's the immigration policy. I do think in 2026, the administration will move to make some exemptions. Farmers are a very important voting bloc for the Republicans, and they've been hit. Well, the farmers have been hit pretty hard. So, there may be some changes in policy coming next year, but there are no obvious jobs. You don't retrain a person in 6 months or a year, and you particularly don't take a coder and make them a construction worker. I mean, these things take time. So we're probably stuck a little bit. What we will see, though, is we're going to see slowly, but surely, productivity improvements. And we're seeing that in the resilience of earnings of companies. They've done pretty well in a year we didn't think they might do as well as they've done.
Sure.
So overall, the glass is more than half full, but it's let's just say it's swirling, it's churning, it's not stable yet.
Blu Putnam, we always appreciate the level-headed comments. You kind of bring us back to earth sometimes. Our resident economist here on Pre-Market Prep. Thanks for joining us always, Blu. Have a good rest of your day.
I'll join you maybe in a month, and I'll make up data if we need any.
Awesome. Thanks,
Are we
Blu.
that desperate, Blu? I hear you. Thank
I don't
you.
know. You let me know.
All right, Blu. Have
Thanks,
a good
Blu.
one. Thanks again.
Thanks.
All right, Triple D. Blu does kind of level us out, talking. And
I mean, I think everything he's just saying is, it definitely gives you some confidence that, hey, the world's not ending here. We see some of the Momo names going down. Michael Burry making bets that the market's going to crash, and then Blu comes on. It's like, he's like, we're fine. You don't think we're going into a major recession, right? I think maybe a little slowdown, but nothing really too crazy. So it's good. Actually, he's probably calm. Like before, he was saying, like he said, earlier in the year, he was talking about recession for 2026, and he's backed off that. So that's a good thing.
He can adapt. Yes.
Let's look to CSIQ earnings here, because last night there was somebody that was very convinced that this stock was going to miss and miss badly. This stock sold off over almost 10% ahead of the report last night. And I was like, did it come out? It was just heavy selling last night. Got all the way down, and you can see it, down. Well, I don't know if you can see it on the chart or not, but there you go. Got down under $27 last night to lows of $26.60. The stock closed $28.46. That whatever information these people think they had, they didn't have the right information here, because the stock beat and is run in here too. So if you're just blindly buying the dip last night ahead of the report, you would have killed it. They did miss. So the funny thing is, the earnings did miss. So give us those numbers.
The numbers here, a loss of 58 cents. That's a larger than expected loss. Analysts were looking for 53 cents. Sales coming in just under 1.5 billion. Analysts were around under 1.4 billion. So a beat on the top line there. Guidance, not so hot. Expecting Q4 sales in the range of 1.3 to 1.5 billion. Analysts are up at 1.6 billion. And this is, I don't remember if you said this is actually like the second night in a row that Canadian solar was rallying.
Had some crazy action.
Yeah.
Non-stop sellers there last night, and they did miss earnings. So it just goes to show you, fundies, man, you think you know something, and maybe this person did, maybe they did, but they were heavily selling it last night, and they were getting spanked this morning because obviously the stock missed. You think it's going to go down? Oh no, it's not. We're going to rally the hell out of this thing. I mean, you could say it's a short squeeze, but the stocks actually had kind of a high bar too. So I don't totally get it, but you know what? That's this market. Michael Burry saying he doesn't totally get it, and he's calling it quits. So I mean, using logic in this market sometimes just doesn't work at all. But that's an incredible, sell-off last night where it's down almost 10%, and then to rebound here on crappy earnings. This one's kind of a head scratcher.
And just to say it, this name has really kind of like separated itself from some of the other solar names. I think the divisions that we've gotten in the solar space have been US and non-US. Canadian solar, a Canadian player, and it's trading. It's been trading a little bit separately from some of the other solar names, like a First Solar.
Yeah, oh, for sure. I mean, First Solar has been best of breed for a very long time here. It's in kind of consolidation station here again, but I mean, this has been, one of the best performers here in the last 6 months, one of the best performers in my long-term portfolio, because I picked it up back in April, and I didn't quite get the lows, but I think it got down to like 130, but 145 to 267. It's been an incredible move for First Solar. And some of these solar companies, I mean, we think about energy. These companies make energy too.
Yeah, for sure. Let's go to at least one more earnings report
Sure.
here. Let's do JD. JD.com was
Yeah, okay.
early this morning. A little look into China, which had its own price action a little bit earlier this morning. JD earnings out at 4:30 a.m. Company reporting earnings 52 cents per share. Analysts were all the way down at 34 cents per share. Sales beating at 42 billion. Analysts were looking for around 41.3 billion. I did not see any guidance that JD gave. The stock popped to 32.88. That was up here and has sold off. It's up a little bit, but it's not up a ton. It's leaked back most of these gains here this morning.
They hate the stock. I have it in the long-term account. I have a small position in it. It's just been a dog. I bought JD, Bob on Baidu, and JD has just been an absolute dog. This is just, and again, whenever it gets a pop, beats earnings, looks good, they just sell it anyways. It's bag holder central all over the place here. And when you have, overhead supply, that matters more than anything else. And I mean, there's just all kinds of overhead supply here in JD. It's been the underperformer. So, fundies look okay, but it doesn't matter because they hate the stock.
I think I would keep an eye up here around the 36 level or maybe even like 36.50, a couple highs around that range. But I mean, that is a ways to go. That's $5 on the upside. On the downside, if I had to pick a level, I mean, you're close to it right now. It's probably around that nice round $30 number, but I like the nice round number. So of course I'm going to lean on those. Another earnings report here overnight, actually this morning, I think better.
Eric Jackson pick.
And Eric, is it cool? Is it fine to call that the number 2 Eric Jackson pick?
I think
Number
so.
1 is Open Door. This one's number 2.
Yes.
Company reporting a large loss. Don't think that surprises anyone. Also missed on the sales. They reported a loss of $2.56 per share. Analysts were looking for around 231 loss per share. Sales coming in at just under 44 billion. Analysts were looking for closer to 50 million. Did I say billion? 43 million. Analysts were looking for closer to 50 million. Better shares trading down. Let's call it about $5 here this morning.
I mean, the report's not great. I don't know what to say about these. Obviously, you get these, I don't want to call it a cult stock or anything like that, but obviously this whole Eric Jackson movement started with Open Door and he moved on to Better, and then he's got a few other ones in there too now. The move on the original Eric Jackson tweet was nothing short of astounding. It went from 30 to 90 in like halts, and like I was like just jaw dropping that he's got that kind of power. So I don't know. I think they buy the dip on this because they just like Eric Jackson. I don't know. Like none of these companies are in my long-term portfolio because I'm not sure the fundamentals support it. But right now, I mean, Open Door has come back viciously too. Maybe we should just talk that because that stock looked like it was, collapsing 4 days ago, got down to almost $5, and it bounced right off the 5. We often talk about 5 being that psychological barrier. It got down to 5.24. I believe after hours it was lower than that though. And, we're up here at 9. So, I mean, our Eric Jackson stocks are starting to pick up steam here again, despite, overall momentum stocks not doing well. Open Door, all of a sudden showing a lot of life here too. These aren't really for me, but I mean, technicals, tell a story here. And it tells a story of like underneath demand on some of these names.
Yeah. All right. One news item here. Ratings. Let's do C real quick before we go to ratings. SEE, Sealed Air, a report. We will see it on the chart here. A report. It was after the close yesterday that the company is exploring a sale. Was this a Bloomberg report, Dennis? Do you remember?
Reuters, I think.
Reuters. Maybe WSJ. Actually, I think it was WSJ.
WSJ?
Yeah. Sealed Air in talks to go private.
Stock pop at 21%, holding on fairly well. Obviously we don't have any updates here. I never like chasing stocks up 21% because if they don't go private, then they tend to leak it back. So I'm always more of a seller than a buyer, but who knows where a price is going to be on this one. Obviously the space kind of been depressed to a certain extent. There's other companies in the space, Amcor, AMCR, also GPK, which I have a small trading position in that one because it's been beat up and I thought it might get a sympathy move, but it doesn't look like it's happening. But SEE up 21% here this morning. It's a big move. I'd probably ring the register into it because, what if you don't get a deal? Then you're going to give all this back? So I think when you get in this market, especially to sell the rep market, you get a 21% pop on a rumor. I think it's more prudent to sell than buy.
And the same uncertainty that Dennis just expressed about the price for this deal, in as far as after this rumor goes, that's what applies when we're hearing some of these reports. So like when we hear these reports and there's prices mentioned, be skeptical of that right away, because the nature of how these deals work is that we usually won't know the price until the actual price comes out. So in this report, we did not hear a price mentioned. I think that's notable as far as the sourcing goes, where you're getting this information from and what's contained in that information. The fact that there was no price attached to this deal and this rumor makes me a little less skeptical of it. All right, now we can go to ratings. Thanks for wanting to cover SE there real quick.
Sure.
I saw somebody in the chat was wanting to cover it a little bit earlier, so wanted to mention that. Ratings land, we have quite a few notable ratings here, and we got a few minutes to get through them. First one, Dollar Tree DLTR downgraded to sell at Goldman Sachs. If there was,
buy.
oh really? A few
Double
notch.
downgrade.
Ooh, if there was ever a firm you didn't want to downgrade your stock, especially all the way from buy to sell, Goldman has got to be right at the top of that list.
Yeah, I mean, I gotta think, like I've said this for a while here, I've been out of the dollar stores because I feel like margins have got to be getting squeezed in here. I mean,
Gotta be.
like inflation was an issue. Maybe it's not as big of an issue now. So maybe these companies aren't recovered because of inflation, at least by the CPI is in check. But holy, I mean, you're trying to broke the buck now. They're trying to do different things. I don't know. And it's not sexy. It is defensive. So if the market goes to get ugly, this is the kind of stock that they buy because it does trade defensively to a certain extent. And maybe it got overshot when it went from 140 to $60 in 2024. So maybe it's kind of where it wants to be. So I kind of just sit neutral on this one. I don't have an opinion.
Let's do a couple more ratings, and then we got a good question from Boris a little bit earlier that I want to
Sure.
get in front of you, Triple D, if you don't
Okay.
mind. KMB upgraded to buy at Argus. In my opinion, Argus isn't the most like dynamic firm out there, but when they're making a call on
Oh, yeah.
a bit of a
I follow.
polarized name like KMB, you pay attention.
I mean, we've been talking about this one in the STN room, and I think if you're buying KMB at $100, 5 years from now, you're probably like, fine. Are you going to make 30, 40, 50% a year on the stock? No.
No.
Are you going to grind out? You got a 4.8% dividend. It's almost 5% dividend when the stock was down $100. Can it grind its way back to 120? I think so. I think, it's treat it like a bond. I think,
Yeah.
Kimberly Clark and Procter & Gamble are staples that, their stuff is recession proof. It doesn't, the stuff that they sell typically doesn't, people don't stop buying it just because they're tight for money. So I kind of like it from a diversification perspective.
Yeah.
I kind of like it at $100. So
And
I like the call.
These couple lows here that I'm pointing, if you can see on the chart with the crosshair, these couple lows are around 109.50. So, I mean, if we had to focus on something to the upside, I would first look to those. What else here in ratings land? I'm pulling up my list. We had upgrades to overweight by Wedbush for Booking, BKNG, and also Dash. Take your pick on one of those, Triple D.
Dash is a mess. So this is a complete contrarian call. I mean, is this going to get disrupted, this business too? I think so. I mean, valuation-wise, it's maybe come down, quite a bit. I haven't looked at the valuation of this one in a while. Let's just do it.
Okay.
49 times forward earnings. I mean, growth is slowing. So I think it's stay away time for Dash.
Yeah.
Booking always seems to be one that goes down a bit, then eventually it's back at all-time highs. So, I mean, buying the dip on Booking has worked forever. So I'm not going to argue with, who is it upgrading it?
It was Wedbush. Wedbush, yes.
It's the best of breed in the travel stocks. They've always just got to figure it out. They changed their name from Priceline to Booking, and everybody's like, what are they doing? I mean, it's just worked. So sometimes you change your name, and it's like, what the hell are you doing? Sometimes change your name, and it just helped the business, actually. So Booking just made sense. People use it. People travel. I mean, as travel go down, it does have its pullbacks and stuff, but it seems like it's just a stock that wants to be at all-time highs. It's been a great company for a very long time.
Couple more ratings here. Nike was I just lost my spot. Nike was upgraded at Wells Fargo. The last one we're gonna get to. We'll just do a little rapid fire here. Circle upgraded at JP Morgan. Start with NKE. Nike
I
upgrade
think
at
there's
Wells
room to
Fargo.
70. I think there's room to 70, so I could buy. I'd be a dip buyer on that reason. But I mean, the stock's in the eternal downtrend, overhead supply all over the place. Is the turnaround imminent here? I don't think so. I mean, I've hated the stock for a very long time. I've been correct to hate it. I do think there's room to 70, and we're kind of in a value-oriented market here right now. So I think, there's a short-term trade here maybe, but I'm not getting married to this position.
All right, one more here. Circle was upgraded following their earnings report. The firm was JP Morgan. Thoughts on Circle here? CRCL.
Stock is massively oversold. I talked about it yesterday being oversold. It just got more oversold. So, it wants to go down, and it's been going down. I mean, it was $150 2 weeks ago. It's $86. So it's massively oversold, but it has no valuation support. So who knows? Does it upgrade turn it around? It has the potential to do it. So let's see what it does today. I mean, it could be in there for a trade, but this stock has just been a mess.
Okay, I want to read our Hive.
We actually, before you do that, there was
Yeah.
a tip here on NKLR.
Yeah, let's do it.
So, I mean, there's a lot of people in the chat here that are still interested in the stock. It is just slowly just disintegrating here. I was in this pre-SPAC, took it from 10, sold half of it at 1950, sold another 2/3 of the position, left at 1750, and then I got rid of the rest of it at 850. I think the story is over here. Unfortunately, what really harpooned it was the nuclear trades just getting nuked. I mean, Oklo coming off from 160 down to 111, SMR coming from 55 to 25. It's part of the same group. And, it worked for a week or two because that group was still holding on strong. But at this point in time, there's no valuation support. There's just hopes and dreams. And those entire nuclear stocks, like the Oklos, the NNEs, the SMR, are just in bear markets here now. So it's going to take a lot to turn the story around.
I think you're making a really good point, but also we've seen NKLR kind of separate itself from some of the other nuclear names, which is like you especially would not want to see that. Even though those nuclear names have gotten hammered, I think separating itself to be its own story is even a worse thing than like trending lower with some of these names.
It's just, when you get into some of these stocks, the death by 1,000 cuts is the worst way to be. It just slowly leaks every single day. There's just sellers in this. So, and again, the volume on this is drying up here too. So it just kind of has become irrelevant, and that's a major issue.
All right, I want to read the Hive ad here. Hive, thank you to our sponsor for pre-market prep, Hive Digital Technologies, global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. I think they were around 2% a couple months ago. We probably should be hearing an update from Hive about that Bitcoin production pretty soon here. We're nearing year end. In the bottom right corner, there is a QR code. You can scan that to learn more about Hive. You can also click into the description of this YouTube video to find a link and learn more about Hive. The question that I wanted to get to you real quick, Dennis, before we logged off from Boris, I got to find it here real quick. It was, I can't find it here, but it was basically like, given this market environment, why would you, the volatility, why would you use equities instead of options?
The one problem when you're using options to trade and you're like buying calls and puts is you're always putting premium out. So you're always, on the wrong side. Like I've said this, for years, is I don't know a lot of traders that have had long-term success being a net buyer of options, but I know a hell of a lot of traders that have had a lot of success being a net seller of options. If you're always buying puts, if you're always just, coming in and like, protecting your portfolio, that insurance costs money. And if you time it right, it's great. But if you don't time it right, it impedes your performance to a point where you actually might lose money. So you can be like long SPY and buying puts and saying, why not? Well, long-term performances in the market are 7 to 8% a year. I know lately it's with 2023, we've been spoiled lately. But I mean, really, in long-term 8, 9%, if you're always using, insurance and you're insuring yourself 5, 6, 7%, I mean, you're really getting nowhere. So, I mean, that's why I'm an equities trader. I think the main point to options, yes, you can hedge yourself, but I mean, we can do it in different ways too. So I don't think that, I'm not like of the opinion that you should be hedging yourself all the time for, the next market event, because that stuff's really hard to time. Unless it's COVID, which was very obvious, and that's why I took puts out on the S&P massively during February of 2020, because everybody could see the writing on the wall. I mean, China was shutting down. I mean, it was obvious, like you look back, it's like, oh yeah, Denny knew something. No, it was obvious. If you were there, you knew where we were heading. So in March, we sold off 30%. I got paid. But I mean, those don't come around very often, pandemics that are blatantly obvious. So I think it's very difficult to time market corrections. And if you're sitting here always buying insurance, or playing it through options and saying, well, I'm just going to buy calls and play on the upside or buy puts, I think putting out those premiums in the long run is going to really hinder your performance.
Well said. We had CC on PreMarket Prep YouTube channel yesterday for the Options Unchained show. That's Wednesdays at 1:30 p.m. And he had the exact same sentiment that you just expressed there, Dennis. He just was like, the timing. You can keep getting the timing wrong, but equities you don't necessarily
This
need to
is
have
it. This is what I talk about. Like some of my best long-term investments, some of my best ones, I got the timing way wrong on that. I talk about Merck, and Merck that I bought, and Lilly. Lilly, I bought at $33 back, I don't know, like 2012. And it went down to like 20. And if I went on calls, it was like a year and a half that I was wrong on that. And it ended up being a huge winner for me in my long-term portfolio because I didn't have it. I'm not on margin. I could sit on those shares forever. And eventually I feel like I'm going to be right. So that's the biggest thing there, is absolutely correct, is you don't have to get the timing right when you're buying equities. You absolutely have to get the timing right when you're buying options. So that's a great point. That's a fantastic point.
Right. And just a little heads up here, whoever it was in the chat, appreciate you. Thank you. Hive will be having their earnings Friday. So just a little heads up, maybe we'll do a little preview tomorrow. No guarantees, but that's going to wrap it here for us on PreMarket Prep, folks. Thanks to the chat for your wonderful participation and loyalty. We will be back with you tomorrow, but Triple D and I are going to go over and jump into the STN room right now.